Wednesday, June 4th, market analysis. Stan Ehrlich. Good morning. You know I start out with stock indexes, go to futures, and have a few stocks, Tesla and Carvana, a couple of them, that I cover at the end. Now, you know that I've been looking for a top in the last few weeks, mostly because of two very significant reasons. The market got overbought in a general area of resistance, which was the tops and bottoms, most of the bottoms, of course, that were developed around November, December, January, early February, which has happened so far. The high being of significance, May 20th. Now, yes, we made a higher high a few days ago, but it closed very poorly, relatively speaking, and went down a little bit the next day, which was Friday of last week. No downside breakout, no significant move, but down a bit. Then it came back Monday, Tuesday, and so far today, we are up a little bit, and we made a slightly higher high than yesterday, but it is in the same price level as it has topped out now, maybe for the third time in 2 weeks. All I need is for it to start to slip from here, slip meaning down, of course, and there's a slim chance. So we could have an outside down day, bearish engulfing today, which would be great. I'd love to see that, but again, it seems a little far-fetched. So anything that's steady to weaker immediately, I think is going to happen. On the other hand, we are at a important turning point. It's either heading south substantially, in my opinion, or it's going to break out to the upside and pop up dramatically and quickly above the highs of the last 2 or 3 weeks and stay there and rally even more. And that would be today, tomorrow, something like that, which I do not expect. But I can see it happening either way. Sorry not to be very decisive, but, I'm 65, 70% in favor of the downside. Next is simply the 1-minute data showing you the activity for the last 3 days almost. Going nowhere fast. Next, Spider. Same commentary, except the SPY did make it today above yesterday's high, which has been yesterday a new high for the last couple of weeks, and it stayed and new high closing ground above the previous highs yesterday. And at the moment, well, it's not going down, but it also is not going up. It's only up, 3 ticks at the moment, slipping a little. So it's unchanged. But the major point here is got overbought, had bearish engulfings or bullish engulfings. I think that was my bass-backwards reversal, and I said so on May 19th, probably. And it's in this massive area of resistance, substantial, November, December, January, early February. So, same comment, I don't think it's going to follow through and start to turn down. What about the Spider 1 minute? Yeah, looking better than the others, I'll tell you that. But I can't go along with it because the others don't look good. We're overbought now for the first time in QQQ, the NASDAQ. So that tells me it's probably going to be turning down soon and maybe not that much higher, if at all higher. So this would be a bearish engulfing today, end up being a red bearish engulfing sell signal, ER sell signal, if it gets below yesterday's low today. Now, because it's overbought, I also am going to be looking for bearish engulfings and therefore sell signals that were official ER sell signals in the next few days. Because this is my first major warning that the market could be approaching a high, and maybe not there yet. In this particular case, the QQQs have a chance of challenging the tops that we saw in December, overbought, 1 day, bingo, turned down, and close to overbought, not quite, and slightly a new high ground back on February 19th. and turned down big time. So this is somewhat of a miniature of what happened before, but it's happening in the same approximate price range where it topped out before. That's my point. And we're now overbought. 1 minute chart. Yeah, it doesn't lead me to any kind of a conclusion. NASDAQ futures overbought for the last 2 days. No new highs. Close. Higher than yesterday, but not above the high of last week, Thursday of last week. And if it has a bearish engulfing, it will be an official sell signal also because of the overbought condition at the same time, or a few days ago. But it's today. So watch out, people. I do think if we see a breakout to the upside, it'll be fast, quick, and substantial. And on the other hand, I'm saying we're on the edge here. On the downside, if it starts to slip, it could slip quite a bit and have that bearish engulfing and be a lot, very fast break next. And here we are, waiting for something to happen. YM, almost the same commentary. Major historical resistance. Problem with this resistance area. It's gotten above it, needs stayed above it for a day or two, but in an overbought condition, unfortunately, and dropped right back down below it, closed the gap, came back up again. Has not been able to make a higher high since the top so far, a minor one, on May 20th. And then last week, Thursday, tried, did not succeed. Dropped off a little, not much. And then we're trying again. I've seen these things happen 4, 5, 6 times, but it's very rare to see it more than, say, 3, and that's why I'm particularly adamant about my commentary this morning. This is number 3. Third time's the charm, so to speak. We'll see what happens. I think something's going to significantly happen before the end of the week. Next, YM. Yeah, that's right, the 5-minute chart, nothing here. Okay, Russell. Damn, it's the same old story. Resistance levels are stopping, the move's up. Overbought conditions did develop in some cases, and so far in this chart, it's the highest high on May 12th. Again, last week, tried to get a new high out, couldn't do it, at resistance, stopped. Pull back, no big deal. Now it's trying again. You know, watch out. 5-minute chart on the Russell. Yeah, looking a little bit weaker. Okay, interest rate futures, bonds and notes. Yay! This is exactly what I wanted to see happen. It's a very strong up day. It's a new high for a couple of weeks. After dribbling back down on Monday and Tuesday, I mentioned the fact that I like it, actually, to get back into approximately the middle of the range of the bullish engulfing ER buy signal. That's the green bar on May 29th. The third bullish engulfing ER buy signal in about 2 weeks. Grouping sometimes is important. I like it significantly. Now, normally I love these. It's a single day down, a spike bottom, people call them. And in your technical analysis textbooks, I'm in a few, you'll see that that's what it's referred to as a spike bottom or a V bottom. These things need to be adjusted a little bit. Sorry, contract month must have changed, and I didn't notice. So, on our way up, now to the resistance area of 115.15, and maybe a little higher, 116.10, that zone. But if that doesn't stop it, and I think there's a good chance that not only will we get there, we're going to get through it, then you've got this significant rally high at 117.10 to worry about. And it's very close to another resistance level. So, you know, between 117.10 and 18.07 is going to be a much more profound resistance level, especially and probably, at my opinion, at this point, not necessarily going to happen quickly, 120 something. Now, 119 to 120. Okay, notes. Hey, same story. But, and by the way, bonds are not anywhere close to overbought. Notes are not anywhere close to overbought either. Remember, my overbought is 75 or higher and 25 or lower for oversold. Not Wells Wilder's original 70 and 30 or George Lane's stochastic 70 or 30. And I learned both from both, personally, back in the 70s and 80s. George was a good friend of mine. I knew Wells fairly well. They're both gone. Now, notes, higher high, higher close lightly, like bonds, on its way. I think the top of the resistance area is easily going to be reached at 111.18, but that's my opinion again. I've been wrong, of course. Hello, government. Now, the rally high, 112.22, I think we could get up to that level. I don't have a marker at that point. I probably should put a little zone in there. It actually looks pretty good. Something in that area. And there is a chance. I can't rule it out. 114.14. Next, crude oil has an outside trading range day, and it is currently lower. That's a bearish engulfing. The high today is right close to being against resistance, and that is a bearish engulfing. It implies that the market is about to go lower, and it doesn't tell you how much lower, and it doesn't tell you for how long. Remember, there's the XY axis. That's all you need to know. But I do expect it to come down to 6,100 pretty easily. And if it breaks below 59.60, then we're talking about, a little below 55. Next, natural gas. Stable the last couple of days, doing nothing, but the bigger picture is this double shoulder, head and shoulder top, inside of which we had a small head and shoulder top all by itself, and it worked very, very nicely. That was the downside objective, and it got met on April 21st. There's the first little shoulder, the head, and the little shoulder neckline, all by itself, the whole thing, taking about a month and a half, something like that, is the head of the larger head and shoulder top, which has a double shoulder here and a double shoulder here. You guys know a head and shoulder tops and bottoms are my favorite pattern. I know them inside and out, and I've seen thousands of them. Many of them failed. So far, so good. This little bounce back the last couple of days doesn't bother, well, it did bother me, but it doesn't do any damage technically. And we're in a little no man's land here. What will do damage? Well, I have to say a close above 3.85 and certainly a close above 39.29. I do not expect that. Besides, it'll take more time, which is bad, and it'll be much more of a rally than I would expect, and then I'm going to have to abandon the whole head and shoulder pattern idea and back to the drawing board, so to speak. Meanwhile, if this thing starts to turn down, stays down, and breaks the necklines, we're on our way. Next, heating oil. Higher high than yesterday. Pardon me. Significantly lower than yesterday's close, but not a bearish engulfing yet. Kind of close. Sorry, but not there. So, we're kind of between a rock and a hard spot. We just can't seem to keep the rallies going. And if it starts to come down, it bounces off slightly higher levels. We got slightly higher highs, but only twice. I don't know. I'm going to kind of pass on heating oil. Frankly, I favor the downside, but shut up. There we go. Gold. Inside trading day. Doji doesn't mean too much one way or the other. Uncertainty. A little higher current quote. Gaining ground. I think the important part here is if we closed at the moment, we'd be a new high closing price ever since about May 7th. That's a month. That could be significant. On top of that, just on Monday, we broke above a bear trend line, stayed above the trend line, closed near the high of the day, and went up a little bit more, and then closed so-so yesterday. Today, the low is fairly steady, a little lower, and the current quote, again, is a new high close potentially, and a little bit more strength. You'd even have a higher high again. So what have we got? A break of a trend line. It's holding above the trend line, and it may make new highs very soon, and that's exactly what I favor. Next stop to the upside, maybe 34.78, and next I would choose 35.37-ish, and then higher than that. Next, silver does have a teeny-weeny gap between yesterday's low and the high of Monday. I didn't put okay, I will. A little tiny little zone in here. It's going to be pretty small. Something like that. And today's a doji, slightly lower. Doesn't mean much one way or the other, but I like it because it closed very strong, gapping away from previous resistance, got up to it, stopped at it real strong Monday, actually had a new high close and a new high both for weeks. So it was a breakout of sorts on Monday. There was the follow through I like on Tuesday, and today is a resting day or a little bit of a dip, maybe to close the gap and then turn up. I wouldn't be surprised. It's normal to see it come back to the support. Oh, 33.90, call it 34, maybe a little under. Okay, we got a strong day again in platinum, like yesterday. Out of the blue, it turns around, wasn't oversold, didn't have reversals, it just turned around. Missed that one. But now at resistance, let's see if it continue higher. What's the picture here? Recently, we made new highs for months and months, since November, October. That's a pretty powerful statement. Got overbought at the same time, unfortunately, and did have a larger break than I thought. But it survived, and now we're damn near making new highs again. So I think the upside is the way to go, and we're going to make new highs above 1105 very soon, maybe this week. We're not that close to overbought yet. This is the way bull markets are acting, although the dip was a little farther than I thought at the time. But I'm liking this. I'm going to call it bullish. I'm going to call it a new high for, oh gosh, a year. Soon. Next, copper. A little higher. Resistance. We'll see if it stops it again. It could. But we're not particularly close to overbought. So we might be able to get through it this time. I do favor the upside. The bottoms are rising relatively steadily. We're challenging recent highs. So I think we're going to break above 4.9, above 50, or 5.0. Beans, oil, meal, corn, wheat. Now, beans are up nicely, 30 cents, very good. A new high for 3 days. The important part here is the lows held fairly well on Monday and Tuesday and now showing some strength. They were a tiny bit below the lows a month ago. Not much, but they didn't collapse. So now you've got yourself a little support zone. And it actually historically looks pretty interesting. Well, I think that warrants a little marker now that it's proving itself again. Just a moment. Yep, right in here. I like that. Okay. Yeah, look at that. Also, yeah, and then this, maybe even further back. That's good enough. So, bounced off support. I'd love to tell you I'm very optimistic it's going to move in a new high ground, stay there, and start a bull market. And there's a chance of that. In fact, I've been talking about it for months. It just hasn't happened. Been very disappointed. Waiting. Got some bearish downside movements. Nothing's happening. But beans are looking a little bit better today. I can't be super optimistic. I need to have a close above 1080. Next. Little rally. Didn't hold. Soybean oil is now lower on the day a little bit. But we were oversold the last couple of days, Monday and Tuesday. So a little rally today is nice, expected. It stopped right at resistance. Exactly, so far. So, stop that. So, I think it could make new lows again. I have no bullish commentary to speak of except the oversold. Oftentimes, usually causes a little bounce, and that could have been already happened today. Support, yeah, it could hold again. Trend line, yeah, that's right. You got a line to be talking about, and it's almost at the same level of support. Give it a week. Neutral, little bearish. Next, meal. I don't know. Can it get up to this resistance level again? Lately, it hasn't been able to do it. And here we go, pulling it to the right more. So I think there's a chance it could stop again. And if it makes another set of new lows, it's going to do it rather sharply, quickly, profoundly, and that'll drop from 290 probably below 280 in a short time period. Yeah, that'll be a significant downside breakout and a continuation of the long-term bear trend. Now, if it does start to close above 300, then I would easily be able to tell you, probably 300 to 310 on the upside. Well, we're already at 300. I meant something like 306 to 310, and maybe even 325. But that's not happening. Yes, it's getting close. I wouldn't jump the gun. Next, corn. Look, yesterday we made new lows for months and months since October, but it got oversold again. So, a little bit of a bounce today. Certainly nothing to open your eyes at. I don't know. I just can't say anything bullish here. New lows over time. Oversold conditions are causing minor bounces like they usually do. The last time it was for about a week and a half. Okay, nice, not great. Stopped a little bit higher than I would have thought. Big deal. Now we've already made new lows again. So, neutral to bearish. Looking for lower levels. Next, wheat. At least we're hanging in here. We're not making any new highs. We're not making any new lows for the matter of a few weeks to months and months and months and months of new lows. So, neutral to bearish. Trend is your friend. Can't keep the rallies going. The new lows occur relatively quickly afterwards. Oversold conditions do what they usually do. It's yellow at the bottom. Yellow and green, got a signal there for a few days. At the bottom, yellow at the bottom, yellow at the bottom, yellow at the bottom. You see what I mean? Next, cattle. Neutral, doji, little higher. I'm bullish because the trend is up. We did have a great sell signal. It did make some very nice money very quickly the next day, but it didn't produce what I was hoping for, a larger downside move and maybe even a trend down, which often happens. My green did, and my green sure as heck did. And that one green did too. So the only drawback I've got with my technique ER signals is I'm not sure how big and how long the moves are going to be. But it sure as heck tells me which direction, which is pretty important, it's going to be. And I know how to get into them, the entries and stuff. Now, next, hogs. Minor new high for the move yesterday. Couldn't hold it. Dropped off, had a bearish engulfing. Implication, it's going to go down some more. Not today, so far. A little bit higher low than yesterday, but the high is also lower than yesterday's high. We're up on the day a slight bit, but right at that resistance area, drag that to the right a little bit, and stopping maybe. I'm thinking it's going to stop here and turn down. We're not at the moment that close to overbought, but look at yesterday's overbought level. I need a 75 or higher, and it got up to 74.86. So that's close enough, but it's not exactly what I would say is overbought. So I don't like to say super close, and I told you so stuff, but if it's 75 or higher, yeah, I'll mention that. Next, Shell, a stock, outside down day, bearish engulfing. It's going to come down, in my opinion, to 66.54 ASAP. Next support, approximately 65.30, and I'm not ruling out gap closures way down here at some support also, so I'm not ruling out a little below 64. Next, Apple had some strength, couldn't hold it, dropped back a little bit, but it's basically unchanged at the moment. The bear trend line might be starting to have some effect. Didn't come super close, but maybe. Now, if it drops down, you got good support around 193 and 195.80, and it really starts at 198.17-ish. None of these numbers I give you guys are supposed to be exact numbers. They're supposed to be close. And hey, I don't mind being exact, but it's not super common. Okay, Tesla, new low for a couple of weeks, maybe a new low close. If it closes below the previous lows, which were on May 22nd, that's a little bit more bearish short term. There's very good support at 292, 293, 292, which I do think could be reached. Now, there is also a gap, so that's likely, obviously, it's a higher price at 306.35, and I think that's where we're about to get down to pretty darn quickly. Next, we've got, and lastly, Carvana. Overbought. Watch out at any time, all of a sudden, if it has a bearish engulfing, it will turn red, and I will start screaming bloody murder. We might have a top like that one, which was a whopper. That red bearish engulfing ER sell signal on the exact high day, February 19th, dropped from, about the average of 285. I'll take the side, down to about 260, low 260s. 20 some dollars took it a month on a 10%, $200 stock. So that could happen at any time with Carvana, and I'm not going to be shocked. Watch out for that. Back to the E-mini, fairly firm at the moment, up 1 full point. I like to speak in SPY terms. So 10 equals 1. So we're up 10, 11, or 1.1. And the E-mini at the moment. You guys have a great day and profitable trading to you.